Hey guys, it's Simon with Trade and Perform Coaching doing the trade review for Tuesday the 17th. So let's just go over something that I go over pretty much every day, very standard and straightforward. And that's first, let's look at how the zones did, right? If we don't have anything else, we want to look at the zones and we can see what those trades, if any, would have generated, right? The objective is out of the zones to take the first touch of the zones, target 6 to 8 ticks, and exit the trade. For more advanced traders, you certainly can stretch that trade further, but the idea is to get you, the idea of the zones is to get great trade location first time into that area and be able to garner a consistent trading routine, right? The key to being successful as a retail futures trader, or really a trader of any, whether you're trading futures or stocks or whatever you're trading, is a consistency and approach, a disciplined focus that allows you to see changes in the market because you're not so sweating every moment and every detail of what the market's doing. So if we can, let's take a look at that. Let me pull my pen up here real quick and we will do just that. Okay, so you can see early in the morning, we make a push into 2047. First time into 2047, we get a rotation up again from 2047 to 20. I believe we rotated all the way up to 2049.50. Let's take a close look at that to make sure what I am telling you is the correct thing. Here we go. So you can see first time into 2047, rotated up to 2049.50. Right now, if you wanted to take, there's two ways to approach this, and that people always ask me questions. You just have to ask yourself, how convicted are you on this zone? Now, when we come in, tag the zone, and push up to 2047.50, as far as I'm concerned, you've got 2.5 points, and your trade is complete at that point. This is actually the first touch of the zone. Here, I'll highlight this up. This is actually first touch. This is actually the second touch, right? The zone's still held. And then this over here would become the third touch, and then this will actually be the fourth touch, right? On balanced days, the zones can hold multiple times. Focus is on the first time into the zone. So that was your first long entry, was right in here. Zone did its job, and we certainly were not thinking short in front of the zone, right? The only option here really is to get long or not take a trade. Those are your two options. It was binary, and you simply have to decide if you're going to trade in the first half hour or not trade in the first half hour. Next, notice there's a complete lack. This Monday's high was not a zone, right? There's a complete lack of zones between 2047 and 2061. That was done intentionally because when you look over to the left at the price action, it did not warrant putting a zone in between there. It was relatively poorly auctioned through here, and I thought we could push up. And that's exactly what we did. We pushed all the way through here, and you see we come right to 2061.50. If you look at the market preview, which again, tonight's preview has already been sent out to members. I posted that preview early in the day. You can see that move into 2061.50. Garnered a rejection, and they pushed to the downside. It took forever, right? So that was the only hard thing. When the market's slow, it's really hard for me to read off the price action. So if you took the front of the zone, you were obviously able to garner 2 points within 20 minutes, right? If you were patient, and some people were, right? What this trade required, and Ron, you did an excellent job, by the way, if you're watching this trade review, just consistently good trading from Ron. I've been coaching him for about 2 years now. He took the trade here. I believe he took half his trade off here for 2 points. Then he moved his stop 1 point above the high. That's all you had to do is make a decision. If you moved your stop 1 point above the high, that's right over here. And then you ended up with a push to the downside. And if you were really patient, you eventually got down to this zone again at 2046 to 2047 area. And you were able to gain, it wasn't quite 20 points, but 15 points was certainly available. That's very straightforward, guys. You have trade location, first touch of the zone, stretch in the markets, and then the other piece that we had this morning, right? A lot of people came in, and you can tell from the opening print, a lot of people tried to push this downside trade and ended up getting smoked again to the upside. Why is that? Well, first of all, people get bearish at the bottom, right? But if we look at a bigger picture of this chart, I'm going to do this right now. Let's pull up a new chart here real quick. Look at let's say look at from a 15-minute perspective. So look when we crunch up this chart. So a couple things are going on here, right? And I want everyone to be clear on this so you understand. First of all, you have to have, it's not just reading the market. We have two components here. We have zones, that's important, that's our support resistance area, but we also have a plan on how we're going to execute at those zones. That gives us a distinctive edge for our trade plan. So we're going to line that out. We have our first. Drew up the 50-60 retrace, and I pointed out last night in the preview that I thought the 50 retrace would provide an area of significant rotation back down, and that's exactly what happened. Secondly, where are our trend lines, right? So this is the original downtrend right here. And you see that 50 and the top of that trend line coincided almost identically with that. Additionally, we had an uptrend right here that's still on track off the lows. Which is the stronger? Well, the longer a trend line is intact, the stronger it is. Clearly, this trend line is beneficial. But that being said, it's not unusual to hit the top of the trend line. And if you look, we have a megaphone pattern working on this trend line here to the downside. Right, you can see it right there, and this is about the midpoint of that trend line. Has now come in like this, right? And you can see we're either going to contain it here, or if we really get expansive, we can push down way down to 1960, right? The other thing that you'll notice is the uptrend has been clearly and definitively broken, right? You see how we got underneath this trend line stretching all the way back to the 15th and prior, right? We've broken that trend line definitively. We backside tested it, pushed down. This trend line is coming off from the top, right? Very strong. We pushed up into it, we attempted to break, get underneath, backside test it, push back down, right? So I want to keep this brief so that everyone understands. Two things happened. People tend to get bearish psychologically. There's two components to trading. There's a technical aspect, there's a psychological aspect. The technical aspect is, does it look like we can break down and come in and test this 1980 area? Hell yeah, it does. Also this 2008, and then obviously the 1999 area from overnight during the French attacks, right? It does, but what tends to happen is people don't get confidence in their trading. If you're like most retail traders, you didn't get confident in the bearishness until this little area right in here, just in time to smoke you in a move to the upside. This is natural, guys. This move up is natural. If you look at the bigger picture, this is a 50-60 retrace. 50-60 retraces are the natural sway of the market. Retail traders tend to want confirmation. They tend to want to see a consistent trend before they'll commit to a trade, and this is exactly the way people get sucked in and smoked. Remember, less than 75% of all retail traders even break even. Less than 5% actually make any money, right? So very, very difficult theater that we're operating in. You better be really good at what you're doing and also know exactly what you're doing. Right? You better have a written trade plan, the ability to execute that trade plan, which are two different skill sets, right? And if you have the ability to make a chart or have a subscription to someone like me, or there's a lot of guys out there, Trader Smarts, Bama Trader, someone who actually has some kind of edge in the way that they execute, right? If you don't, and you're trying to do this all on your own, right? You have three separate skill sets: charting, you have execution psychologically, you have the tactical point of execution, your actual written trade plan, and then you have your strategic trade plan, which is how are you going to increase size and advance over time. All of this requires discipline. All of this requires structure. All of this requires an approach that will let you succeed. All of this is what most retail traders do not have, right? And most of them don't even realize, because they lack the experience, they don't even realize in an area like this, right? They're getting bearish down here after a 100-point rotation lower. They're just asking to get killed, and emotionally they just think it's going to fall lower. Here's the irony of all this: we probably will come lower, right? We just made a 60-point detour on the way to doing that, right? So everyone's clear. 50-60 retrace, trend lines to the downside, broken uptrend going back 2 months, right? This trend line's clearly broken. right? Unable to push to a new high. We pushed to 2010, 2016, 2017 was the high. We were unable to do that. And lastly, you have NQ that broke to a new year-to-date high and then got trapped back down underneath, giving overall sellers control, but near term, meaning just for 2 days, if you tried to press, right, you got run over from the short side. So I want to see how that translates over into having a good execution of a trade plan, right? If you come over and look at the trade plan from today, see if I can do that really quick. Tool. And I look at this trade here, right? So I had a couple of clues. First of all, NQ tried to push below Monday's high out of the gate. Notice ES tried to push below Monday's high out of the gate. By 9:30 a.m., both of them were trading above Monday's high. That's the first thing that tells me, hey, there's no need for me to be overly aggressive unless we can trade back below Monday's high. You'll see both on NQ and on ES, Monday's high ended up acting as a pivot point all day long. Secondly, inability to push below Globex low out of the gate. Both here's NQ, Globex low, excuse me, here's NQ, Globex low, here's ES, Globex low. We got nowhere close out of the gate. You got to have two things happen. You have to get below prior day's low, and if Globex's low is lower than Monday's low or the prior day's low, you know that sellers are not in absolute control yet, right? You can see we spent a significant amount of time consolidating, attempting to push to the downside in both markets. When that failed, over-aggressive shorts had no choice. They came in and pushed. What did they push for? From 2045 all the way up to 2063, right? Notice how well this zone is placed. This same zone placed down here, everyone gets stopped. This zone has to be placed in the right location. It's not an easy skill set to acquire. There's a huge edge in knowing where to put your support resistance zones. This results in, and I had highlighted in the preview, that 2061, 2063 should get a strong rotation off of that, right? It took a long time, but it got that rotation off. When we roll from 2063 back to 2045, we're in balance. I expected balance, right? What happens in balance? We tend to push to new highs and then push back in the middle. We tend to push to new lows and then make an attempt to push back in the middle. My guess is overnight we will attempt to push back into 2055. We'll probably have a relatively narrow range heading into Fed Day tomorrow, unless there's some kind of news event. And then I imagine, well, I don't imagine. I'm not going to try and guess what happens on Fed. So my name is Simon. I'm a Trade and Perform coach, and I hope this was helpful and educational for everyone out there. My goal is to help frustrated or struggling traders move from frustration to consistent success, right? It's not easy, but it can be done with a disciplined, structured approach and a willingness to be a learner before you're a trader. Okay, so it's not BS. There's not an easy path to profitability. There is, however, if you'll follow some simple rules, a quick path to decreasing your losses and getting closer to break even. After you get to break even, then you can start working on getting consistently profitable. But there's a process. It's a time frame. I don't sell easy fixes because there's not an easy fix. There's hard work, there's dedication, and the desire to be a really great trader. Those guys can make a lot of money, right? Everyone else is trying for an easy buck. Keep chasing the subscription services, right, where everyone's calling trades left and right. All they'll do is run you out of your money. And I really feel when people tell me they're doing that, the best thing to tell you is to take your trade and run away, go someplace else, right? So anyways, that's my 2 cents. Hold on to your money. You work hard for it. Learn how to be a professional trader. Learn how to make professional decisions. This market will quickly part you from your capital if you don't know what you're doing, but it doesn't have to be that way. Anyways, have a great night, guys. I will see everyone in the morning. I don't trade Fedly, so I'll only be in for the AM tomorrow. Have a good night. Oh, if anyone would like to try 5 days in my room, see what a professional trading environment looks like and the decision-making process looks like, feel free to email me at tradeandperform@gmail.com. Happy to extend a 5-day trial. Have a great night, guys. Talk to you soon.